Hey everyone, I'm Scott Cunningham, aka Scottsy Business, and today we're going to be doing the final episode on stablecoins, where I go back and I talk about a little bit about each of the different types of stablecoins, and then mainly we're reviewing and comparing all of them, and I'm sharing my final thoughts as to which stablecoin is the best, and or if you should even be using stablecoins at all. I'll be diving into all of this after a quick word from my sponsor today. A big thank you and shout out to my sponsor Cake Wallet, which is an open source, non-custodial Bitcoin and Monero wallet that also has a built-in exchange. It's available on iOS and Android. Thanks again to my sponsor. So, as I was saying, we're going to be looking at all of the stablecoins that I've reviewed. I mean, we're not going to dive into all of the stablecoins, but generally the different categories like fiat collateralized, crypto collateralized. You've got CBDCs, you've got commodity-backed stablecoins, lots and lots of different categories of cryptocurrencies in terms of stablecoins. But the overall theme is really that we can't really trust them that much. And while there's a lot of people who do trust some of the larger stablecoins, the fiat-backed ones that most people are familiar with, like Tether and Coinbase's USDC, for example, they're not really that reliable. We've looked at that in the first episode. When you go through and you actually look at their attestation reports, it's literally just a 1-2 page PDF that says, yes, this is correct. There's little to no proof, not much transparency. We don't even know how the audits or attestations are being done. It's really just a lot of fluff. And no matter what, you end up trusting a third party, which is what you're trying to get away from with crypto. The whole idea of cryptocurrency and blockchain technology is that you're able to remove the middleman and you create trustless solutions, so you don't have to rely on some party, some third party entity to have that trust and do some sort of thing for you and ensure that, you know, there's nothing going wrong with your finances or your transactions or whatever it happens to be. The point of crypto is to remove that and make trustless solutions. And a lot of these stablecoins, if not pretty much just all of them, don't really live up to that ethos of blockchain. And thus, in my mind, I would just say stick with Bitcoin and Ethereum. And, you know, when you got to get out, maybe for a very short amount of time, you can put your crypto into USDT or USDC or whatever while you're trying to just, you know, exit the market. But even then, that's really sketchy, because what if you had $1 million in Bitcoin, you sold it all into USDT, and you're like, okay, this isn't really a big deal because, you know, I'll hold it for a day or whatever as I'm going to withdraw. And then they blacklist your account for some reason. USDT has blacklisted over, I believe, 700 accounts the last time I checked, somewhere around there. USDC was only like below 100 last time I checked. But I'm sure it's always increasing, and it's going to get worse and worse. And these centralized entities behind them, they're 100% centralized, right? They can freeze your account at any time when we're talking about fiat collateralized crypto. And again, for people who aren't super familiar, you didn't watch all the previous episodes, fiat is just regular sovereign currency like US dollars or Canadian dollars. And the whole idea of fiat collateralized stablecoins like Tether, USDT, or USDC from Coinbase is just that it's supposed to be pegged 1-to-1, like 1 US dollar, 1 USDC, or 1 USDT. That's the idea. But they're lending and they're doing all this stuff in the background. I mean, USDT, Tether, is transparent that I believe last time I checked, it was like less than 5 or 10% of their money is actually, you know, legitimately just held as US dollars. The rest is all being lent out or bonds or whatever it happens to be. They're finding ways to put that money to work, and you don't really get any of that benefit, but they do. So there's been so much controversy around all this stuff, but I'm just going to go through my list now and kind of just give a quick summary of each of the coins that we've looked at in the past and why I'm not really a fan. So, I mean, again, too long didn't read. You could end the video here if you don't care. Like, if you're looking for what's the best one, I'm going to say pretty much none of them. But if you want to hear my thoughts on all of them, then, you know, stick around. So the first one I'll talk about is Terra, Luna, and UST. I mean, everyone knows all about that. I covered that in my algorithmic stablecoins video. It's a failed algorithmic stablecoin. most algorithmic stablecoins fail because either they plan to fail or it's just unrealistic to expect a community incentive to back a cryptocurrency. You need actual backing of some sort of asset. Otherwise, it can come crashing down like we saw. DEI, not to be confused with DAI, is another failed algorithmic cryptocurrency stablecoin that failed not long after UST. Titan and Iron Finance are traditional examples from, I believe, a year or two ago that Mark Cuban promoted, and that was one of the first big algorithmic stablecoin rug pulls or crashes, rather. And the funny thing is too, with Terra, the founder Do Kwon, he and the creator, I believe it's Nadir something from BitClout, they were the ones who made Basis Cash, which was an algorithmic stablecoin that failed some years ago. And if people knew that, I feel like they wouldn't have gotten into this, realizing that he's repeatedly making these failed algorithmic stablecoins. But the takeaway really is that 99% of algorithmic stablecoins are probably going to fail, or they're just not reliable because you can't rely on community incentive. The only one out there in existence that I like and use to some degree is Hive-backed dollars, because I really like the Hive ecosystem and I'm fairly confident in it. But at the same time, I don't know if I can truly trust any stablecoins. So I had quite a bit before, but on the way down with the crypto market, I took that money and I used it to invest in Bitcoin, Ethereum. Originally, I was at a loss and now I'm up. So I'm sitting in a pretty good position. I don't feel bad about that decision, but I still like HBD and I still do hold some today. And that's the only stablecoin that I hold, mind you. DAI is a decentralized crypto-backed stablecoin, which is good because you want to get away from fiat, right? If you are getting into the crypto universe, you shouldn't then be relying again on fiat. It's kind of counterintuitive, but it makes sense because the whole reason that people use stablecoins is that they can, sell their crypto at the top, make sure they keep something that stays stable so that they can get out or back in without having to worry about losing any money in the process. And that makes a lot of sense because there can be massive price swings. It could take, a day or something to get your crypto into an exchange, or the exchange might be overloaded with orders and deposits and all these kinds of issues, right? So that makes sense. The problem and why I don't actually like DAI is because while it's considered decentralized and it's run by MakerDAO, I don't believe that any DAO is truly decentralized because there's so many ways that DAOs can be centralized. I've talked a little bit about this in the past. I'll do an episode in the future covering exactly just what is a DAO in general, and maybe some good examples, because before I was looking at bad examples of DAOs. But I'm a little skeptical that DAOs are truly decentralized, and a lot of times, because it's called a decentralized autonomous organization, people just assume that they can't do anything wrong, which they obviously can. And one of the biggest problems with DAI is that more than 50% of its backing is USDC, which is kind of ironic because the whole idea is that it's supposed to be crypto backed, but it's backed majority by a fiat collateralized stablecoin, which just means it's backed by fiat. And moreover, because USDC is completely controlled by Coinbase, they could literally blacklist wallets, freeze transactions, do anything. They could pretty much topple DAI if they really wanted to. I mean, it wouldn't make sense, but that could absolutely happen, right? So there's something to keep in mind. Wrapped Bitcoin is kind of a unique one because it doesn't really seem like a stable coin because it's not pegged to the dollar, but it's a coin on another chain that is pegged to another coin. So this is another crypto-backed stablecoin or crypto collateralized stablecoin, and it's backed 1-to-1. Some people would just consider this a bridged asset because there's so many things like this now where you've got assets from one blockchain on another blockchain, but it's just bridged over. The problem is that you still rely on a DAO to manage the bridge and those conversions. So there could still be some sort of issue that might arise. And Nothing is truly above questioning. I don't trust any of these stable coins. So the next one, USDC, as I've continued to mention, is Coinbase's main stablecoin. It's the second largest stablecoin in the market. It's backed by multiple fiat assets, mainly issued on Ethereum, but it's on a couple chains. And again, they have the second most banned addresses that I'm aware of. And USDC is backed by BlackRock, which is very concerning because we know they're involved in so much shenanigans, monopolizing markets, and just they have way too much power and influence. And it's concerning when they are rising and UST is falling, USDT, Tether, and a lot of their market share is going to USDC. And a lot of people speculated that the fall of UST was actually from USDC, which is also backed by, I believe, JP Morgan. And so there seems to definitely be some sort of collusion or maybe even just collaboration between banks and very powerful financial institutions and USDC. Mind you, the next one on my list, USDT Tether, isn't really that much better. It's not necessarily involved so much with like banks and large financial companies, but it's still just some private company that is managing a lot of this stuff. And while I prefer to use USDT on the Tron network because it is very, very efficient and low fees, they have the most banned addresses for their stablecoin, and they're in that regard even more centralized than USDC. I mean, they're equally centralized in how they can just freeze anyone's transactions, undo transactions. They can do anything they want, really, which is very scary. But it's even more concerning that they're just private entities and they don't really have it. There's no insurance backing. There's no regulation, really. There's very little that can keep them on the straight and narrow, which is concerning to me. Trust token, TUSD, is probably one of the better fiat collateralized stablecoins because, they have real-time attestations. They're fully backed. You're still relying just as much as, Tether and all these other ones. You're still relying that it's all accurate. But in my experience, Trust token does seem to be the most legitimate. But, take that with a grain of salt because I don't really like any stable coins. So it is what it is. And then for Binance and Paxos, BUSD and USDP, again, like the others, not very good with their attestations. I've never seen a company that actually shows me some legitimate proof that they have the funds, aside from just saying, yes, we have the funds, and someone else saying, yes, we agree that they are not lying. And that's not really anything to me. Gemini Dollar, GUSD. This is a smaller stable coin that's fiat backed. And again, it's just as centralized as the others. It's just a lot smaller. Going back to algorithmic coins that haven't failed yet, Tron DAO's Reserve USDD. This is a newer one from Tron because they wanted to apparently get into the algorithmic stablecoin market as everything was going crazy, which really doesn't make sense to me. But if anything, it feels like they're putting Tron at risk by making this and doing this. But if anything, the creator of Tron, Justin Sun, he might just be more aware that Tron is kind of not that relevant. It's not really doing a lot. So maybe he's trying to squeeze as much out of it as he can. I think Tron is interesting, but it's just so centralized and it's not super reliable in my opinion. Paxos Gold, PaxG, is the gold-backed stablecoin. And these are interesting because I like the idea of backing your stablecoin with actual good assets, not just fiat dollars. Even though it's still pegged to the dollar, it's nice because you have actual gold. But you're still relying on a centralized entity to store it and manage it. And you're relying that they're going to actually honor giving you the gold if you request it. All these different things. And, there's very low liquidity on a lot of the gold-backed, commodity-backed stablecoins compared to the fiat collateralized ones. And then you have the same issue with XAUT, but with even lower liquidity and adoption. So the main issues that I see for a gold-backed stablecoin is you're limited to all these different things. Like I said, they're still holding the gold for you and all these different issues that are introduced. Bitcoin is gold, but on the blockchain, essentially. That's the use case, more or less, today. Not originally, but that is the use case today. And when I look at Bitcoin and compare it to a gold stablecoin, I think, why would I rely on some entity to manage the gold when I could just buy Bitcoin? And that's kind of, solving a lot of those problems, right? It just depends what you want to do. But personally, I'd rather just have real gold. And if I was worried about not being able to bring it with me or, sell it or transfer it very easily, I would be using Bitcoin for those types of transactions. Then, as I was mentioning before, Hive's HBD, it's backed by Hive, and then it's controlled by witness policies, the witnesses who are running the nodes on the network. And again, while I'm not really into it anymore, as I was, with a lot more money previously, I'm still holding HBD, and it's pretty much the only stablecoin that I hold seriously. I mean, I have a tiny bit of BUSD just to pay this developer that I work with sometimes, but in terms of actually holding stablecoins in the long term, HBD is the only one that I hold, but I barely hold any. Like, I sold 95+% of it, and I don't intend on investing in stablecoins. It's just something that I will occasionally hold a little bit of, and I have it on the side, but it's not something that I'm so trusted in that I'm going to just hold on to it for a long period of time. And then lastly, we have CBDCs, which I talked about in the last video, which is essentially bank denominated cryptocurrency stablecoins. So central bank digital currencies, CBDCs. Kind of a mouthful, but it's really just a central bank like the Federal Reserve in the US would be the ones creating these stable coins. So it's not very different from how your fiat money is managed in the United States, except there would be so much more control held by the Federal Reserve. I mean, they already have a ton of control, but if only central banks can issue this cryptocurrency, then other commercial banks are going to have an even harder time keeping up with that, and they have to hold that cryptocurrency, and they can't come out with their own, as far as I'm aware. But there's a lot to it, and I've linked where you can actually go and see all the different CBDCs out there, what's actually launched, what's in research, what's a pilot, what's in development, all these different things. And while it could be a little good for liquidity and getting new people onboarded, they're essentially another way to centralize control. And I'm just not, I'm not confident in CBDCs being good for the long term. I mean, realistically, if you want crypto, you should be holding it in as a decentralized way as possible, where you are fully responsible for it. I fully expect CBDCs to introduce, ways to tax you easier, tons and tons of different things. Like, they'll probably have you hold your crypto with a wallet that they control, not where you actually control it. I'd be very skeptical, or rather, I don't believe that they would create a CBDC that isn't highly centralized and controlled by them, the same way like UST is. They would never create a decentralized CBDC, so don't get your hopes up on that. That's pretty much everything, though. At the end of the day, you should want to stick with the ethos of cryptocurrency and blockchain, which is privacy, freedom, full control and ownership, and decentralization, none of which are really fulfilled by any of these stablecoins that we've talked about. I mean, you could argue some of them are more decentralized than others. Yes, but there's always pitfalls, for each thing. Like, one might be more decentralized, but it has very low liquidity, and that's also a risk. Or, DAI is supposed to be decentralized, but then more than 50% of the backing is from USDC. So there's all these pitfalls and drawbacks. And really, at the end of the day, if you're wanting to hold on to a cryptocurrency, you should just be holding Bitcoin and Ethereum and other really good good fundamentals, good use case, good tokenomics, those types of cryptocurrencies are great. You should never just be holding on to stablecoins, especially if you're trying to like get stablecoins so you can lend them for a high APY. Look around. All the lenders are going bankrupt for good reason, because it's unsustainable. And don't get tricked by, high yields or things like that. You should always be focused on decentralization. So that's my take on stablecoins and my comparison/review. I know it's a little underwhelming because realistically, you didn't have to watch any of this. You could have just watched the beginning and been like, okay, yeah, all these coins are not really that good. But for the full breakdown on all of them, this is it. So I'm sure there's probably a bunch out there that someone's going to comment in the comments and say, yeah, but what about this one? How did you miss this? Or, this one actually is decentralized, et cetera, et cetera. Maybe, but I'm very much leaning towards no, it's not any better than any of these. It's probably very similar. I'm just not a fan of stablecoins as a concept because by and large, they all have their own problems one way or another that would make anyone who's very seriously into the ethos of blockchain not even want to use them at all, and you wouldn't even think twice about it. So let me know what you think, though. That's my take on stablecoins. Comment in the comments below what you think. Comment #1ham to let me know that you watched the whole video from start to finish. And I'm Scott Cunningham, aka Scottsy Business. Thanks so much for watching. Cheers.